Hello, everyone. Welcome, welcome.
Hi, Teresa. Hello to everyone else as well.
How is everyone tonight?
Good so far.
All right, so we'll just hold tight for a couple minutes and just let a few more people pop on here and then we'll get started. Could somebody unmute themselves just so I can check to make sure that I can hear you?
Hello.
Okay, thanks,
Hello.
Kathy. Perfect, thank you. Let us know in the chat where you guys are calling in from tonight. See how far around the world we spread. Welcome, everyone. If you just popped on, we're just waiting. We'll just give it another minute and let people pop on that might not be here yet, and then we'll get started. We've got people from Nanaimo, Victoria, St. Albert, Saskatchewan, Medicine Hat, Vancouver, Airdrie, all Canada still. Oh, there we go. Texas, Edmonton, Grand Prairie, BC. I'm in West Virginia currently. Cancun, there we go. Mexico. All right, guys, so we'll get started. Welcome and thank you for coming out tonight. It's not that often that we do evening sessions, but here we are on a Wednesday evening. Grateful to have you guys all here tonight. Tonight's session is focused on Japan 225. If you've ever traded Japan 225, can you put a 1 in the chat? So that's what we're going to learn about today. Japan 225. Boss candle strategy meets Japan 225. Okay, so just a couple of you so far that have traded Japan 225 before. So it seems like for most of you, it's going to be an introduction. All right, so here's a little overview of what we're going to cover today. So tonight we're going to meet Japan 225. We're going to talk about what is Japan 225. We're going to talk about different brokers, symbol names, price feeds, and spreads. We're going to cover risk management for Japan 225. We're going to talk about different adjustments that you need to make with the boss candle strategy when you move to a different symbol or a different pair or a different instrument, kind of a bunch of words for the same thing. We're also going to do a live trading session on Japan 225, and then we'll wrap up and answer some Q&A questions at the end. So what is Japan 225? So Japan 225 is an index similar to US 30, but this is an index of the Nikkei, which is the Tokyo Stock Exchange, the TSE, where US 30 is a bunch of stocks that comprise the Dow Jones Industrial Average, and we call it US 30. But basically, Japan 225 is sort of an equivalent product for the Tokyo Stock Exchange, similarly to what we normally trade on the New York Stock Exchange. It is considered to be one of the most widely used benchmarks for the performance of the Japanese stock market. So similar to here, when you're watching the news and you're watching like the financial time during the news, and it shows you like the ticker symbols, right, of the most important indexes that they care about. So in here, they'll show us like the Dow Jones, they'll show us the SPX, they'll show us the NASDAQ. In Japan, they talk about Japan 225 or the Nikkei 225. And so just like US 30 is comprised of a whole bunch of different stocks, 30 different stocks that make up the index, Japan 225 is also comprised of a whole bunch of stocks. And these stocks are reviewed semi-annually in September and March and decided what stocks are going to still be a part of it or maybe which ones aren't. And so these are an example of some of the companies that make up Japan 225. So some of them that you've probably heard of before, like Toyota, Sony, Panasonic, Mitsubishi, Honda. Those are the Canon. Those are the ones on this list that I've heard of before. And then obviously there's a lot more, and this isn't an exhaustive list, but you could look it up. Obviously, if you wanted to know all the stocks that are on Japan 225, you could look up that information and find out for yourself. So a few other things that we need to know about Japan 225 is what brokers offer Japan 225. So when you're trading, depending on what broker you choose, that broker will have different instruments or symbols available. And so sometimes you might have a broker and you hear somebody talking about trading something. I'm trying to think of an example. Let's the Turkish lira, for example. So when I was new, I had a mentor that I followed, and he would often trade the Turkish lira. And so I would go on my broker and I would try to find that pair. And it turned out that my broker did not offer those exotic pairs. So I wasn't able to trade that. And so if you wanted to be able to trade that, you would have to purposely seek out a broker that did offer that product. And so it is possible that tonight you're going to look on your broker and you're going to go to your quote screen and you might try to add Japan 225 and you might not be able to find it. It could be that your broker doesn't offer that symbol at all, and you might need to find a different broker if you're interested in being able to trade Japan 225. It's also possible that the broker has a different symbol for Japan 225. So just like US 30 is very often known as US 30, but some brokers call it WS30. Some call it US 30.mini. Some call it US 30.cash. Some call it DJ30, some call it DJ.mini. So there's a variety of different names that different brokers call the same product. And so that's the case as well for Japan 225, that you might have to look up on your broker's website what your broker calls Japan 225 so that you're able to add it to your quote screen or add it to your watch list if you trade on TradingView. There's some other things that we need to look at. So we need to be able to compare the price feed of different brokers. So we should all know, unless you're brand new to the call tonight, which then you won't know anything. So just sit back and hang out and kind of observe what we do, and you'll just kind of get an idea of what our community is like if this is something that you're interested in learning. But if you've been trading with me for a bit, you'll know that US 30 doesn't have the same price feed between different brokers. So if you were to look at US 30 from Currency.com as a broker, and you were to compare that to the feed from US 30 on Owanda, you'll know that the price is not necessarily the same. Maybe it's 13 points different from one broker to another broker. That's going to be the same on Japan 225, that not every broker is going to have the same price feed. And we are going to look at this live in a few seconds so that you can try to a little bit more hands-on and see what I'm talking about if this is going over your head at all. The other thing we're going to compare is the spreads. So we're very used to trading US 30, and US 30 is known for having a very low spread. With Fusion, which is going to be the main company I use as an example tonight to draw from, just to give us some examples. My spread on US 30 with Fusion Markets is normally 1.5. My spread with Japan 225 right now is 6.4. So some people might make the mistake of just assuming, oh, I don't want to trade Japan 225 because the spread's too high. It's very important that you only compare spreads on symbols or instruments to each other, and that you're not comparing one spread of one symbol to the spread of a different symbol. Okay, you don't want to compare the two. But the spreads on Japan 225 are going to be higher numbers than what we generally see when we're trading US 30. The other thing that we're going to look at is what is the indice's base currency? So when we trade US 30, what currency is US 30 based in? It's based in the US dollar. Now, if we're trading something that's based in Tokyo and it's based on the Nikkei, which is a Japanese stock exchange, what do you think that the base currency might be for that index? The yen, exactly. And so that affects us quite a bit when we're looking to trade Japan 225. It adds an extra layer of calculations that we have to do when we're doing our risk management calculations. And so if you look over on the right-hand side over here, it says, what is the base currency for Japan 225? The base currency for Japan 225 is the Japanese yen. And when I looked this up tonight, the difference in the pricing here is that $1 in the US was worth 129 Japanese yen. And so we're going to see later when we get to a different slide how this conversion between the two different currencies, how that affects our risk management calculation and how there's an extra step that we have to do. But first, I'm going to pause sharing this screen. And just bear with me for 1 second. I'm just going to switch over to sharing different screen. Okay, so we're going to come over here and just cover a little bit of the information that we covered on that slide. So on the right-hand side of TradingView here, I have a watch list that I made for tonight that has a bunch of different Japan 225 products. All of these products are from a different broker. So for example, this is Japan 225 from Black Bull, okay? This is Japan 225 from Global Prime. I want you to look at the last price of those two feeds from two different brokers on the same product. And we'll notice that one of them, the price was 27,352, and the other one is 27,362. So there's about a 10-point difference between those two price feeds. As we continue down through the list, this is Japan 225 for 8 cap, and it is more similar to the price for Black Bull. It's only about difference by about 1 point. Here is Pepperstone. It's very similar to 8 cap and to Black Bull. Then we have Owanda. Owanda actually has quite a different number, 27,212. It's the most different that we've seen so far. And it's quite different. I mean, like 150 points different. Here is Forex.com, also quite similar to Global Prime in this case. Okay, so those two are fairly similar to each other. Then we have Capital.com, and it's more similar again to Black Bull, 8 cap, and Pepperstone. And then at the bottom, we have the actual and like a Japan index that's traded on the New York Stock Exchange. I added this mostly because I just wanted you to recognize, look at the difference in this number. This is not the same product, okay? So if you accidentally add this to your list, I just want you to click the X and delete it so that you're not accidentally trading completely the wrong product. Okay, so that's one thing that we wanted to cover, is that there is a variety of different different price feeds here. The other thing we want to take a look at is the spread. So I'm going to switch this to only be one screen for now. And I'm going to flip through some of these and we're going to observe the spread. So right now we're on Black Bull and you can see the spread up here. When you look in the middle of your ask and your bid buttons and you put your mouse over top of here, it says 6.04. This is the spread. For those of you that are really new and you don't know what a spread is the difference between the price here in the red button and the price here in the blue button. And the spread is how the broker makes their money when you first enter a trade. When you enter a trade, you're automatically going to start that trade in the negative, the amount of the spread. And before you get into profit, you need price to move in your direction by at least that much so that you get back to break even. Okay, that's how the broker makes their money. And it's the difference between the red price and the blue price. So if you were to do the math right now and subtract these two numbers from each other, you would end up getting 6.04. Okay, so that's the spread on Black Bull. We can see right here the name of the broker that we're on, and that's what the spread is. If we go to now, we are on Global Prime, and we can see that on Global Prime, the spread is 5. Okay, so the spread on Global Prime is a little bit lower than it was on the first one that we looked at, which was Black Bull. If we continue down this list, we can see that 8-cap also has a spread of 6.4. We can see that Pepperstone has a spread of 8, so that's the highest spread that we've seen so far. Here's a Wanda, and their spread is 7. Here is Forex.com, and their spread is 10. So now we have a new high. And then also Capital.com is also 10. And then Fusion, because I know a lot of you on here that follow my calls probably have Fusion. For me tonight, Fusion was at 6.4. Okay, so you can see that there's quite a variety of different spreads provided by the different brokers. Now, if you were shopping for a broker because you wanted to trade Japan 225, would you be looking for a broker that offers a higher spread or a lower spread? What would be most advantageous to you? Lower. You want a lower spread. Perfect. Okay, so that's one of the things. If you're shopping for a broker because you want to trade a specific product, you are looking to find a broker that offers a good spread. What are some other things that you might be, if you wanted to trade Japan 225 and your current broker didn't offer it, what are some other things that you would want to know from your broker before you were to decide that you wanted to use that broker to trade that symbol or instrument? Yeah, perfect, Leah. You'd want to know if they charge commission. Yeah, you'd want to know that broker's minimum balance to start an account with them. You'd want to know the spread. You'd want to know the hours that that symbol is open. Does it have any times during the day that it closes for a daily close the way that US 30 does? You'd want to know the contract size. And you'd want to know the minimum volume. Yes, another good one from Leah. You'd want to know your funding options. What are your options to fund money into that account? And then going along with that, you'd also like to know your withdrawal options. How are you allowed to withdraw funds from that account? There's also swap fees, which I won't get into right now, but for more advanced people, that's another thing you might consider asking a broker about or reading on their website about. Okay, so that's kind of a short list of some things that you might be looking for when you talk to a broker or read a broker's website when you're researching a broker to use for Japan 225 or any other symbol that you might be interested in trading. Okay, so the other thing that we wanted to talk about here is the spread. And I like to have these ask bid buttons on so that you can see the difference. So when we're on capital.com right here, we can see that the spread is wide. We can see that it's a 10-point spread. And so you can actually visually see it here. If we were to go down to one of the other brokers that had a smaller spread like Global Prime, the spread is only 5. So you can see that there's less distance between those ask and bid lines. Another thing to note about the spread when you're talking to your broker or you're reading about them is you want to know if your spread is fixed or if your spread is variable. Most brokers offer a variable spread. So what does that mean? If I was to enter a trade right now and my spread was 5, does that mean that my spread is going to be 5 throughout my entire trade? No, it doesn't. Okay, so during your trade, the spread could actually increase or decrease. If you look right now and you watch, this spread has been fluctuating between 5 and 5.5. So should we just wait a second? Maybe we'll see it flick up to 5.5 again. It has a couple times, even in this last 1 minute candle. There it is. Now it's 5.5. Now it's back down to 5. So when you're in a trade, if the spread changes during your trade, that can affect whether price hits your take profit or stop loss. Okay, so it's super important to understand that your spread is variable and that it's still variable while you're in a trade. Okay, so I'm going to switch back to my slideshow here. Okay, so the next thing we're going to talk about is risk management. So there's a few different things that are going to be the exact same when we're doing these calculations that we're very used to. So what is the first thing that we need to know when we're calculating our lot size or we're doing our risk management steps? The first thing that we need to know is what is our current account balance. So for this example, we're going to use a $3,000 account. The second step in calculating your lot size is that you need to know what percentage of your account are you willing to risk per trade. Now, the maximum should be 2%, but if you want to risk less than that, that's okay. Maybe you're only risking 1% per trade or 0.5% per trade. Whatever you decide to risk is fine as long as it's less than 2%. And also, the amount that you're risking per trade shouldn't be varying trade to trade or day to day. Whatever you choose to risk per trade, that should be a very stable number for a good amount of time in a row until you actually make a decision that you're changing your trading plan and you're moving to a new percentage, and then you're going to stay at that percentage for a long time. So this shouldn't be something where you're like, oh, I really like this trade, so I'm going to risk 2%. And then you're like, I'm not sure about this trade, so I'm only going to risk 0.5%. If you're feeling that unsure about a trade that you don't want to risk as much, that should just be a sign that there's reasons not to take the trade, and you just don't take it at all instead of risking less per trade. The third thing that you need to know is how many points are in your stop loss. It's very important to realize that you can't just use 30 points as we do while trading US 30. Price is different on Japan 225. The spread is different on Japan 225. The amount of points in an average stop loss is going to be different on Japan 225. Okay, so you can't just take the 30 points that we use on US 30 and automatically apply it to Japan 225 or any other symbol or instrument that you decide you want to trade. Okay, this is where we're going to talk about this later, but this is where if you decide that you want to take the boss candle strategy and you want to apply it to a different product, you might need to do some back testing so that you can determine what a good average amount of points in a stop loss is good for that pair, and what the spread is on that pair, and what any other adjustments that you might need to do, such as like what time of day you're going to trade that pair. Okay, so there's lots of things to factor in. Step number 4 is going to be what is your contract size and what is your minimal volume on Japan 225 on the broker that you're using. So I would like you guys to do this. If you have MT5 or MT4 on your phone and you're already connected to a broker, can we have some people go and look for Japan 225 on their quote screen and then click on details or symbol properties so that you can go and see what your contract size and what your minimal volume is on Japan 225. For example, with Fusion, the contract size is 10 and the minimal volume is 0.01. Okay, so that's what it is for Fusion markets. So if there's somebody that has a different broker available on your MT5 or your MT4 on your phone, and you can go and click on your quote screen, find that pair, tap on it, and then look at either it'll say symbol properties or details, and just let us know what it is for you, just so we can see some variance between different brokers. Okay, so while we're waiting for some people to add that to the chat, we'll move on to step number 5. What is your lot size for this session? Okay, so this is the calculation that we normally do, but I want you to note that there's going to be an extra step in here. So we would still take our $3,000 and we would multiply it by the amount we want to risk per trade from step 2, and that's going to give us our $60. Step 3, we're going to divide that $60 by the amount of points in our stop loss. In this example, I used a 60-point stop loss. So we're going to go $60 divided by 60 points is going to be $1 per point. And now you're going to see the extra step. What did we decide the base currency of Japan 225 is? Is it the US dollar or is it the Japanese yen? It's going to be the Japanese yen. So because of that, you're going to take your $1 per point and you're going to multiply it by the current exchange rate between the US dollar and the yen. Now, as we know, because we're in the Forex market, right? We're Forex traders. We know that this number is changing all the time, all day long, right? 24 hours a day, 5 days a week, this market is open and it's fluctuating. And so even while you're in a trade, this number could change, which we're going to see as an example of that later. So what you're going to do is you're going to go $1 per point times 129.23744. That was the current exchange rate when I was making this slide deck. That equals $129.23. You're going to then divide that by the contract size. So now we're back to our normal steps. So the only thing different here is that you have to adjust to the currency that we're using as the base pair, or your numbers are going to come out wrong. In this case, you would be risking very, very little per trade if you didn't do this step. Okay, you'd be making pennies per point when you probably want to be making dollars per point. So once you've done that, then we're back to our regular steps. And in our regular steps, we take the amount that we are wanting to play per point, and we're going to divide it by our contract size. In my example with Fusion, my contract size is 10. So I take my $129.23 and I divide it by 10, which equals 12.92. That is going to be my lot size. But I also need to check and make sure that my minimum volume allows the above amount of digits after the decimal. So if I go back to step number 4, my minimal volume is 0.01. And so I am allowed to play 2 numbers after the decimal. So I am allowed to play 0.92. Okay, and my max volume on Fusion for Japan 225 is 40. So if my lot size calculated out to be bigger than 40, I would just still only be able to play 40. That's the maximum I'm allowed to play. Okay, now this is an example of after I had taken a trade. So what I like to do, and this is how really way back in the day, this is how I taught myself how US 30 worked and how lot sizing calculations were done on US 30, is I do a process that I like to call reverse engineering. So what I did here is I just randomly took a trade on Japan 225. So I'd like you guys to do this. If you're set up that you can take a trade on Japan 225 on MT5 or on TradingView, I just want you to take a random trade on a demo account, to be clear, okay, on a demo account. And I want you to just leave that trade running for a few minutes. And then once it's been running for a few minutes, just close the position, regardless of whether you're in the positive or the negative. It doesn't matter. This is just a learning experience so that you can get to know Japan 225 and truly understand how it works for yourself, not just sort of being taught it and not just trying to memorize it, but like actually internalizing it yourself and truly understanding the concept. And then once you've done that, what you can do is what I call reverse engineering a trade. So if you look at my trade, you can see that I entered at 27,386 and 58 cents. And I exited the trade at 27,352 and 98 cents. So my net on that trade was 33.6 points. That's how much the trade changed in points while I was in the trade. The next step is to look at what is your profit or loss in dollars. So in my case, I had earned $33.59. So then what you want to do is you want to divide that $33.59 that you earned or lost. Okay, this would work in either case. And then you're going to divide it by the amount of points that you netted. So in this case, 33.6. And you can see that that equals 99 cents per point. Now I want you to go to step 8, and we're going to look at what was your lot size. So in this trade, you look here, my lot size was 12.92. So we're going to take 12.92 and we're going to divide it by the Japanese yen current conversion rate to the US dollar. That comes out to 0.099. We're going to multiply it by the contract size of 10, which takes us back to 99 cents per point. We're going to times it by our 60-point stop loss that we originally chose, and we'll see that if we would have lost this trade, if this trade would have hit our 60-point stop loss, we would have lost $59.40. If we go back one slide, originally we were risking $60 per trade. And so during that trade, the currency price between the Japanese yen and the US dollar maybe changed a tiny, tiny bit so that it didn't come out exactly to be $1. Now it only came out to be 99 cents. This is the one thing that you'll really have to get used to when trading a product that does not have the US dollar as its base currency, because while you're in the trade, that currency, that pair is still changing in value. And so sometimes the numbers might come out a little bit different at the end of your trade as they were at the very beginning of your trade. This is also one of the reasons that we highly recommend trading in the US dollar, because if you had your account in Canadian dollars, you actually have to do this extra math for every trade that you take, because most trades that you take are in the US dollar. And if your account was in the Canadian dollar, you would have to do this extra math on every trade. So if you've ever wondered why we recommend US dollar accounts, that's why. But in this case, because we're trading a product that has the Japanese yen as its base currency, then you have to do extra math. Okay, and that's that little disclaimer down here. USD JPY exchange rate is always changing, even during your trade, which can affect your calculations. Okay, so this is how we would calculate our lot size for Japan 225. Very similar to what we do for US 30, but just with that one extra step. And then if I go back to trading view for a second, where you put your lot size is still the same. Okay, still in between your sell and your buy buttons, your red and blue buttons. This is where you type in whatever the lot size is that you want to use. This is where you type it in. Okay, moving on to the next slide. So the boss candle strategy, what adjustments do we need to make? So there's some things that we need to think about. We need to think about how many points on average are going to be in our stop loss in Japan 225 trade. We need to think about what is our spread, and we need to think about what sessions we should trade in. what sessions do you think would be the best time to trade Japan 225? What markets do you think should be open? Yeah, you want the Asian markets to be open. So we have the first market that opens for the Forex market. So like, let's just picture that it's Sunday afternoon. The first market that's going to be open is going to be Sydney. Okay, Sydney will be the first that opens. And then 2 hours later, that's when Tokyo will open. Okay, and then in the middle of the night, London will open. And then in the morning, New York will open. And those are the main sessions that we have. So just like we trade US 30, mostly when the New York Stock Exchange is open, the best time to trade Japan 225 is going to be when the Tokyo Exchange is open. Okay, so in Eastern time, Tokyo opens at 7 Eastern. Now you might have to check with your broker. Every broker sometimes does have slightly different open times. They also will have slightly different times where they close. Their daily close can be different, okay? So make sure you check with your own broker. But about 7 p.m. Eastern is around when Tokyo will open. Okay, so those are some adjustments that we need to make, and not just for Japan 225, but if you're wanting to use the boss candle strategy on any other time frames, any other instruments, maybe on stocks instead, maybe on commodities instead, maybe on Forex pairs instead, you need to make sure that you're making these adjustments before you start trading live. So whenever you're trading something new, what should you be trading on? Yeah, perfect. We should always be using a demo account. If I'm going to try a new broker, if I'm going to try a new symbol, if I'm going to try like a new pair, whatever, if I'm going to trade on a new platform, like maybe you're moving from MT5 to TradingView, or maybe you're using a, I don't know, what's it called on Global Prime? Oh, I can't think of what the app's called. The Traders Evolution, is that what it's called? They have their own app for trading. So if you're using anything new, you should be practicing on a demo account first. And so considering at the beginning of this call, only a couple people told me that they had ever traded Japan 225, my assumption is going to be that everybody is going to be practicing on a demo account. Okay, so what we're going to do is we're going to watch Japan 225 together, just like we do on US 30. So you guys will be able to see my TradingView chart on Japan 225, and we're going to watch it together, and we're going to look for trades to take on our demo account. Okay, so before we do that, if anyone has any questions, feel free to unmute yourself and ask questions now, or to type questions in the chat if you have any. Your broker has 2 different feeds and the names are different than what it shows in TradingView, if that makes sense. Yes, so the names definitely could be different. What are the names of your Japan 225?
Can you hear me? I figure I'll just unmute.
Yeah, I can hear you.
Yeah, so I'm on Awanda and it was showing Japan 225 and then Japan 225 and then JPY in brackets. So, and the difference between those, I think, is the difference between, like, I think one of them like does the conversion for you, but the numbers are different as well.
Right, the price feed will be different because it's already calculated the price feed using the conversion.
Correct, yeah.
Yeah,
So that
so
confused me, but I got that one figured out.
Yeah, so there's lots of different things that you can see. So for example, capital.com, their symbol is J225. Mine is JPN225. So there's a difference right there. I've also seen them to have symbols that are totally different. Like, yeah, this JPX, JPY, totally different type of symbol on forex.com. So you will need to make sure that you know that the product that you're searching for is in fact the one that you're wanting to use. And if you need to double check with your broker, pretty much all Forex brokers have 24-hour-a-day, 5-day-a-week chat. And it's super important that you don't just guess, but that you go on and you ask them the question and make sure that you know what product you're trading. Okay, so right now I am on Global Prime feed of Japan 225 right now. What else do we need to do before we start trading? What do we always do before we start trading? News, okay? So just like we check the news on US 30, we also need to check the news if we're going to be trading anything else. So what news do you think we care about right now if we're trading Japan 225? We're going to look for high impact Japanese news. Okay, so I don't see anything that's going to interfere with our call here. There is some low impact Japanese news in 23 minutes, which is nice because at least you get to see what it looks like. But we generally only are concerned with high impact news or if there was a lot of news at the same time. So that looks okay to me. I'm not overly concerned about that. And that's all we have. If we were to bounce over to Forex Factory, we can look here and see that we have some low yellow impact news showing on Forex Factory, but that's it. Okay, so we look good on news for this session. What else do we do before we start trading? It is moving, but it's moving very slow. The last candle did paint 4.5 points, so it is moving, but very, very slow. Okay, the other things that we need to look at is the trends, right? Just like we would normally look at the trends for US 30, we also want to look at the trends on Japan 225. Now, because this isn't what we normally trade, we're not going to be familiar. It's not like we know what happened yesterday and last week and last month and basically like know what happened for the last 4 years, because it's not what we trade every day. So it's probably going to take a little bit more time to get yourself familiar with what Japan 225 has been doing, because it's not something that we trade regularly. So maybe we're going to look back in time more than we normally would. So if we were to zoom way out on the daily time frame, then we can see what it's been doing over the last like few years, right? This is looking back now quite a few years. So we can see that very similar to US 30, the market tanked in the fall, spring of 2020, and then it pushed up very similar to US 30 up until summer, pulled back a little, pushed up again more recently. Okay, and then since then it's been falling back. We can see that there's a high way up here marked out in these like little dots right here. We can see that there's a low down here marked out for us, and we can sort of just see what price has been doing more recently. So now that we kind of have an overall view of what things have been doing, now we can zoom in and look at more recent timing, and we can look for our EMAs. So we have the aqua EMA below the gray, which means we would call it a downtrend. Okay, if the aqua is below the gray, then we're in a downtrend. We have the 800 EMA is not stacked in its downtrend order. It is like out of order, so we don't have AGB or aqua gray blue. We would also check where price is on the TDI. So right now, price on the TDI is at about 56% right now. The last candle closed over the 200 EMA, and so far today's candle has pulled back very slightly bearish so far right now. Then we'll drop down to the 4-hour time frame. So on the 4-hour, we can see that price was recently on a pretty good downtrend, right? Look at the EMAs. They were stacked in their aqua, gray, blue, A, G, B order. The EMAs were fanning out from each other. Price was dropping away from the EMAs, moving with the trend until it bottomed out down here. Then price started to move back up counter trend towards the EMAs. Then it pushed back down again with the trend, back down to the same lows, didn't even attempt really to take them out before price gave up again and pushed back up counter trend, this time all the way through all the EMAs until it got above the 800 EMA. Okay, so this is the 4-hour time frame. This most recent move up caused the aqua and the gray to cross over each other. So we would now call the immediate trend on the 4-hour time frame in an uptrend. And again, we're not stacked in AGB yet for an uptrend. Only the aqua and the gray are in their position. And we would also check where price is on the TDI. We're sitting at about 64, 65% right now on the TDI. Here is a look at the 1 hour. So the 1 hour, the aqua is above the gray. So we would call this an uptrend as well. So we have confluence between the 1 hour and the 4 hour, but we don't have confluence between the 1 hour and the 4 hour compared to the daily. We also, the 1 hour is stacked now in AGB. So we have the aqua, we have the gray, we have the blue. They're stacked in their proper AGB order now. Price on the TDI is at about 57%. Drop down to the 30-minute. 30-minute time frame is also stacked in its aqua, gray, blue order. Price has been above the EMAs. The EMAs have been fanning out. Price on the TDI is at about 54%, and it's been struggling to TDI shift down. You can just see that price has been riding right along this yellow line that we call the liquid 50. And you'd be looking to see if price is actually going to cross that liquid 50, which we would call a TDI shift, green crossing over yellow. But so far, that liquid 50 has been rejecting that TDI shift, and it hasn't happened yet. Here is a look at the 15-minute. So this is also stacked in its uptrend order, aqua, gray, blue. Price has been riding along this aqua quite a lot. So the EMAs haven't always been fanning out from each other for the last couple of days. They've been fanning out and then constricting a little, and then fanning out, and then constricting a little, fanning out. Right now, price is literally riding right on top of the aqua on the 15-minute. And price is riding right along the stationary 50, which is the 50% level of the TDI. Price is riding right along that level. And we know that the liquid 50 is equivalent to the aqua, sorry, the stationary 50 is equivalent to the aqua EMA on the candle portion of our chart. If I was to make my 50% level aqua, just to help you recognize that when price is at the aqua on the candles, it will always be at the 50% level on the TDI. Those two are equivalent to each other. And we'll drop down to the 5-minute. The candle's taller. Okay, so here's a look at the 5-minute. So the aqua is above the gray. We are also stacked in our aqua, gray, blue AGB order. We have price on the TDI at about 45%, and currently price looks like it's trying to TDI shift down. So we'll see if that actually happens in the next little bit here. Drop down to the 3-minute. We are stacked in aqua, gray, blue, but look how tightly the aqua and the gray are pinching together. It looks like these will probably cross each other. If price continues to consolidate or even go down, it would probably cause those to cross. The TDI has recently shifted down, and price on the TDI is at about 45%. And here is the 1-minute. Okay, so the 1-minute, the aqua is now below the gray. So we don't have confluence between the 1 and the 3. The 1-minute is already on a downtrend. The aqua is already crossed below the gray. but on the 3-minute, currently, it's still in an uptrend. So we don't have confluence. Now, some people in their trading plans have rules that say, I only trade if I have confluence between the 1 and the 3, or I only trade if I have confluence between the 3 and the 5, whatever the time frames are. Okay, so that would depend on each individual person's trading plan. And on the 1-minute, price on the TDI is at about 37% right now, and price has been pushing back down towards this 800 EMA. It held price very well over here. We'll see how it does again right now. So now, just like we do on US 30 in the mornings together, we'll start watching for entries. I'm going to split my screen into the 1 and the 3. And we'll see what we can find. Now, if you're trading on a demo account, please let us know in the chat if you need any help calculating what your lot size should be. If you don't remember from the, we only went through one example, so I don't expect you to necessarily have memorized that. So if you need some help calculating what lot size to use, depending on what size demo account you have, please feel free to ask in the chat. If you have a brand new $3,000 demo account that you just opened, it's going to depend on what broker you're on, what lot size you're going to use. On TradingView, you have to use 120. Okay, if you're on TradingView. If you're on Fusion Markets, if you have a $3,000 account, you would use 12, about 12.62. Okay, but like we learned about, every broker is different. And so you need to make sure that you're adjusting your lot size to match your broker's contract size and your broker's minimal volume. The 3-minute, honestly, Sarah, it's kind of a funny story. The only reason for all this time that I wasn't trading US 30 on the 3-minute was simply because the indicator that we used, that matrix indicator, didn't work on the 3-minute, but the indicator that Jake built for us does work on the 3-minute. So for a while now on my live calls for US 30, we have been watching the 3-minute. It is possible that Japan 225 just isn't an option on your demo account. Sometimes brokers don't have the same product available on their live accounts as they do on their demo accounts. So if you want to be able to practice trading Japan 225, maybe just open a paper trading account on TradingView, and then that way you can practice trading Japan 225. Okay, so your contract size and minimum volume is 1. And what's your account size, Tamika? Okay, so if mine was 10, so you're not going to divide by 10, you're just going to divide by 1. So you're going to go 12. Hold on, let me go back to my document for a second. So your numbers are going to be very similar. You're going to be $3,000 times 2% is $60. You're going to go $60, divide it by 60. That's going to give you your $1 per point. You're going to times it by 129.23774. That's going to be similar. So at this step, instead of dividing by 10, you're going to divide by 1. And so your contract size, you're going to use 129. That'll get you close enough for tonight. And then if your broker has a maximum volume, check for that. And depending on what the maximum volume is, that could restrict you in how big you're allowed to play. Okay, so currently the volume in the market is pretty low. Not a whole lot happening at the moment. So we're just going to have to wait like we normally do until we get a trade that does well for us. In the meantime, we're going to do some looking back at the charts and seeing what our stop loss would have been for some trades, just so we can get an idea of what our average stop loss looks like. So I'm going to go back and just zoom in right here for a second. what kind of candle pattern is this right here? Not maybe the strongest example, but what does this roughly look like? If you said Morningstar in the chat, because I can't see it for some reason right now, you are correct. Okay, we'll call this a Morningstar in this example here. So let's just pretend we are taking this as a Morningstar. I know it's not oversold. It's not a trade that we would actually take, but we're just going to use it as an example to just figure out how many points would be in your stop loss. So if we would have been entering here at the close of this candle, which closed at 26,321, we're going to measure back from our entry price back to where our stop loss would be. And where's our stop loss going to be? If this was our entry candle, we're going to be looking for our fractal low. So we're going to turn on our fractal indicator. Here's our lowest low of our fractal. We're going to go spread times 2 below this. Now, what do I have to do? Do I just use 1.5 like I normally do? No, I need to use 5 times 2 because my spread is 5. So 5 times 2 is 10. I need to go 10 points lower than this low, which would put me at 26,299. Okay, so this is where my stop loss would be. And then I'm going to measure using my ruler. I'm going to measure from my entry price down to my stop loss, and I'll see that there's 21 points in this stop loss. Okay, this is an example of what you would call, I mean, this could be called both. This could be homework, like you're marking up charts, but this could also classify as back testing if you're testing for something specific. So if you want to know, hey, on average, how many points are in my stop loss when I'm scalping Japan 225 on the 1 minute, and you went and did this over and over and over again on a whole bunch of entries, and you were keeping track of it on a spreadsheet, this is what I would call back testing. If you were doing this and you weren't putting it on a spreadsheet, keeping track of anything, I would just call it homework or marking up charts. Okay, so this is something that you could do over and over and over again until you start to kind of get a feel for how many points are normally in your stop loss. Dad, when you were trading Japan 225 regularly a while ago, what would you say was your average approximate stop loss on Japan 225? If you know roughly.
Yeah, it was like roughly 20. I think it was between 15 and 20. We weren't getting to the 30 points very often.
Okay. Okay, so a little bit smaller than what we normally do on US 30. All right, see what happens here. So we're not in a great position here, unfortunately, during just the timing of this session and where the market currently is. Price is stuck in between these EMAs. There's not a lot of distance between these EMAs. That's only 20 points between the highest EMA and the lowest EMA, and the candles are stuck in between that 20 points. For us to kind of find any trades here, we would like to see price break out either above these EMAs or below these EMAs so that we can find some trades to take. And again, just a reminder to make sure that you're in a demo account because we're learning and we're exploring trading a new symbol. So we want to make sure that we know what we're doing before we're ever using any sort of real account. Not that I would ever suggest that you would trade on the real account. That would be ludicrous. It is possible on the 3-minute time frame that we're going to get a TDI shift up that is maybe going to close above the aqua on the 3-minute. So we can watch for that. It would be nice to see price also close over the 200 EMA on the 1, which this candle would still need to push up a fair amount to get up there. And so far, it just gave a nice little rejection there off that aqua. So looking less likely for that to happen. Yeah, no problem. Yeah, I'll just do a withdrawal from my demo account and send you an e-transfer. You can go buy some fake groceries. They probably take monopoly money.
So all the rules would follow here, Teresa, right? Like the iceberg.
Yeah, so same trading strategy. So if you were to look at where the price is on the TDI, potentially we could get stuck here in between the liquid 50 and the stationary 50, probably not for very long because it's really, really tight together. Here it goes, already starting to shift down. A little bit of volume suddenly.
I believe it's because their lunch break was over.
Good to know. Okay, so
Yeah,
somebody,
yeah. They closed for an hour during the middle of the day.
okay,
So I believe that's why the volume was really low.
good to know. See, we're learning new things already.
For instance, those in Pacific Standard Time, the active hours are 4 p.m. to 6:30 p.m. and then 7:30 p.m. to 10 p.m. That's for Pacific. So those in
Okay.
BC.
So it just ended right now at 10:30 Eastern would be the end of that slow time.
Yeah.
All right, well, we'll see if we pick up some volume now. So price on this candle wicked all the way back down to that 800 EMA and then rejected off of it. So we're still jammed up between these EMAs, and it's a pretty tough spot to be in because between the EMAs, there's only 19 points from the very top to the very bottom. So pretty tough to do much, still kind of looking for price to pick a direction to break out of those EMAs, or maybe to give us an entry very close to this 800 EMA so that we have room to take a trade all the way back up to this 200 EMA, but knowing that that's only going to be like, that'll be less than 20 points. Okay, so currently price is pushing down to a previous low that we can see that price hit over here on the 3-minute, right? Price right here. Right down to those previous lows. We'll see how price handles it. So far, pushing down below those lows. So all of our entries and exits and everything are going to be the same. So if you follow our call regularly, then you will, already be familiar with the entries and the exits. On the 5-minute, rejecting off of that 200 EMA. Unfortunately, the timing of our call right now just has things a little jammed up. 15 minutes, currently showing a bearish engulfing candle, potentially closing below the aqua and outside of that purple channel. That's about 12 minutes away until we'll know how that closes, but it's definitely got some room to drop should it decide to do that. Had some volume there for a bit, and now we're right back to just frozen price, not moving at all, unless it's just me. Hold on, let me refresh my screen. Okay, not just me. Leah's frozen too. We had some decent volume there. Oh, there was a gap. See where that candle closed and where the next candle opened. There was a gap on Global Prime. Anyone else have a gap on a different broker than Global Prime? no gap on 8 cap. There is a gap on fusion. There is a gap on global prime. No gap on Owanda. Gap on Osprey. No gap on PVC. So we've got quite a variety here, half with a gap and half not with a gap. Okay, so that 5-minute candle closed with a TDI shift down, but closed basically crashing right into that 200 EMA. So far, there is a pullback on that candle, which is either a pullback or it's a rejection off 200 EMA. Kind of hard to know in this case. It would be nice to see a candle close below that 200 EMA before we can do anything there. Also a gap on Black Bolt. Have a good night, Mandy. So lots of us are used to trading US 30, which is pretty high volume, pretty high volatility. It could take some adjusting to get something used to, just getting something used to something a little bit different, a little bit slower. Like cutting the grass with scissors. Or helping your 5-year-old learn to count to 100. All right, so that TDI shifted back up. Very small, tiny little candle, only like half of a point, not even a whole point. Have to put too much stock into that candle. Thank you, Leah. Glad that you're finding some value in it. Sarah, I miss you. I haven't seen you around for a while.
Yeah, my sleep schedule has changed a little bit, so it's actually kind of exciting to be learning about the Japan. I'm awake a bit later than up earlier.
Okay, well, yeah, that's good. That's why we're doing it, is to give people that can't come to my morning sessions another option. They can watch all the training, and then they would be able to trade on their own in the evenings. And occasionally we'll try to have evening sessions like this as well. Kind of not making any promises yet because I'm in the East. So for me, it's almost 11 o'clock right now. And then obviously I still have to be up in the morning to do my morning calls. So makes it a little bit tougher to run evening sessions, but I'm hoping that we can do at least once a week.
Well, I really appreciate you doing this tonight, Teresa. Thank you.
Thanks, Sarah. All right, price really not going anywhere. All these last few candles, very, very small. Some of them actually literally showing a 0-point candle. So very, very little movement.
I love that you took a moment to train us on this though, and really were thorough with the calculations and understanding the difference in like the currency conversion, because it's one of those things where if you have any sort of inclination towards perfectionism, I kind of have been hesitant to come on some of the calls that didn't make sense to me because I didn't understand them and I didn't know how they worked. And so thank you for giving us this training.
You're welcome. It also taught me, because I had to go back and really make sure that when you're making a slideshow presentation, you really got to make sure that your crap is in order and that your calculations turn out to be true. So I had to go and take some fake demo trades again myself. I haven't personally traded Japan 225 for a decent amount of time. So I had to go back and just make sure that I still had that all nailed down. Okay, so because everyone should be on a demo account, and I would like to be able to take a trade on here, there's looking like there's going to be a bearish engulfing candle close on the 3-minute. So it's an entry. It's probably not a trade that we would normally take just because of these previous lows right here. But as long as you're on a demo account, just for some practice actually executing a trade on Japan 225, and so that we have some numbers to review for the final part of the exercise, if this closes, I would like you to take the sell. Oh, and then of course it and it opened with a massive gap down, so the entry is bad. But the point of this is that I want you to look at these two candles and decide, is this type of trade that you need to set your stop loss based off of a fractal high, or is it a D-low and you only need to set your stop loss off of one of the two D-low candles that has the highest high? So because the yellow EMA is cutting through here, this would make this a yellow D-low. So your stop loss is going to go spread times 2, and remember that you need to check your spread. So mine is currently showing 5.5. So I need to go 5.5 above the highest candle, which mine are actually exactly the same, times 2. So I'm going to go 11 points above 53.5, which is going to be 64.5. Okay, so the spread is, or the stop loss is here. And then as far as targeting, we're going to ignore that there's a previous structure right here, and we're just going to pretend it wasn't there for this example. And we'd be looking to target down here, try to find a place where price hit the same level at least 3 times. Okay, so I'll go for here. And then everything else is also going to need to be adjusted. That's why I actually wanted to take a trade together during this call, because you can't just trail your stop loss on this spread times 2 above the yellow EMA and accidentally use the spread of 1.5, right? Your spread, for my spread right now in Global Prime, is 5 or 5.5. So if I was going to trail spread times 2 above the yellow EMA, I would need to be trailing a yellow 11 points above the yellow EMA. So if I look at where the yellow EMA closed on this last candle, it had closed at 51. If I wanted to trail 11 points above there, I would want my trailing stop loss at 62, okay, which is definitely not at break even for me yet. Price has started to push down. This last candle was about 11 points. Our entry candle was about 5 points. So in comparison to the volume we've had, it's a decent sized candle, but nothing too exciting yet. Current price, we're about 20 points down from our stop loss, but we're barely in profit on our entry. Okay, so a little bit early to try to move your stop loss anywhere yet, but watch this yellow EMA. You're looking for that yellow EMA to get closed under your entry price. Because of this gap down, the entry ended up being really bad. It's not a super great example, but I just wanted to still have the experience of taking a trade on Japan 225 so that you end up with some numbers of where you entered the trade, where you exited the trade, so that you can do that reverse engineering process that I showed you earlier, so that you can truly for yourself make sure that you're understanding the lot size calculation process, and that you're really understanding how it works on your broker if you decide that Japan 225 is something that you're going to continue to trade. There is a little bit of a structure back here, right where price is right now, so hopefully it'll bust through this and give us a little bit of a run here so we get an opportunity to trail a stop loss. I want you to note the ask and the bid lines. So if you look at the blue line, we are in profit, but the red line, we're not in profit, right? So we need the red line to be under our entry price before we're going to show any profit. Have a good night, Anna. Okay, so again, we're waiting for this yellow EMA. We would like to see it close below our entry price before doing anything with our stop loss. And then because the spread is so much higher, even if you were to move your stop loss spread times 2 above that yellow EMA, it is still not going to be at break even. It's still going to be in some drawdown where it would end up if this candle was to close with the yellow EMA below your entry, because the spread is so much larger. We had a little yellow D-low close on the 1 minute, a little bit far from the aqua to actually probably be traded as an entry. But just for people still trying to recognize their candle patterns, right? The 2247 candle and the 2246 candle. The red candle is engulfing or larger than the candle before it at 2246, and the yellow EMA is cutting through it. So it qualifies as a yellow D-low, but not necessarily a yellow D-low that we would actually take as a sell. All right, come on now, Japan 225. Give us a nice drop for demonstration purpose. Do it for the people. That's the opposite of what the people want. What kind of candle pattern is this close to? Not exactly ideal in the middle. Middle candle with like the wick on the other side, but the general candle pattern here is a morning star. what broker is that spread on, Sarah?
Black Bull
Black?
on my demo on an MT5.
Not showing as high on Black Bull on TradingView is only showing at 6.04. Quite a difference between.
Well, it seems like it's really, really high, but my numbers are 27323 and 27304. So that's 19. Like it's huge.
Yeah, that's a big spread.
Yeah.
And that's a demo account on MT5. Yeah, I mean, if you decide that Japan 225 is something you're interested in trading, I would reach out to Black Bull and just get some confirmation from them on what their spread is. There's a little bit of issues right now with MT5 and accounts because of the Ukraine-Russian war and Apple deciding not to support products owned by Russians and stuff. So there's a problem with that feed right now. So I would just reach out and talk to Black Bull and just get some confirmation that that's what their spread should be showing as. And I'm guessing it shouldn't be. And maybe there's something that needs to be done to like refresh the broker or something.
One can hope. I just refreshed the broker today. Well, not the broker, the app today. But yeah, that's pretty crazy.
Yeah, it is. Okay, so that trade closed there on me when did it close? No. How come all my buy sell buttons oh, because I switched to Black Bull. Sorry, never mind, I'm losing my mind. There we go. Just going a little crazy there. Okay, just for fun, I would like you to look at the last candle that closed, so the 2248 candle. I'd like you to look at where the yellow EMA closed on that candle. So you got to put your mouse on that candle with your indicators unfolded. And then with your mouse over that candle, you can see what price the yellow EMA closed at. So for me, it closed at 27,342. So if I was going to trail my stop loss by 11, then I would want to be at 27,353. So I'm going to drag my stop loss down to 27,353. Okay, so you can see that even though the yellow EMA closed very slightly below my entry, my trailing stop loss, if I'm going spread times 2 above that yellow EMA, is still not in profit. That was the point I was kind of trying to illustrate earlier. It's just because the spread is so much larger, it's making it so that my stop loss is not going to break even near as quickly. So this is an example of one of the things I was talking about, that you have to adapt the strategy to fit what works on that symbol. And there might be some changes that you need to make it work for you. And that's where back testing comes in. So we'll just leave this trade running here and just see what it does, but I'm going to switch back to my slideshow and we're going to start to wrap up here. Eventually that trade is going to close. And when that trade closes, I would like you to do this exercise. If you guys would like, take a screenshot of this page. And then that way you'll have this example here to do, but these are the steps that you're going to need. You're going to need your entry price, your exit price. You're going to need to do the math on the difference between those two numbers so that you know what your net points was. Then you're going to need to look at how much you either made or lost on that position. And you're going to divide that by the number that you calculated over here, the difference between your entry and your exit. And that's going to tell you how much you were making or losing per point. And then once you know that information, you're going to do step 8 and you're going to look at the lot size that you used and you're going to work your way backwards and you're just going to check to make sure that if your stop loss was hit, would you have stayed under the amount that you were willing to risk at the beginning of the trade? And you just need to keep in mind that the number of the USD JPY exchange rate might have changed while you were in the trade. So the number might not come out exactly. And then I also want to point out that if you're trading on a Canadian dollar demo account, these numbers are going to need an even further calculation, which is why I strongly recommend not trading on a Canadian dollar account, especially if you're going to trade pairs that don't have the US dollar as their base currency, because it's just going to make it even extra complicated. Oh, thanks, Leah. You are the best. Okay, Leah took a screenshot already and put it into the chat. So if you guys want to download the screenshot that she took, you can do that. Okay, so once this trade closes, I would like you to do this exercise. And when I get down to my next slide, you're going to see what I have to say about something back here. Okay. Benefits of homework and back testing. So I'm going to give you a little bit of definitions here of what I define the difference of homework, or like marking up your charts, versus back testing. So to me, I consider like homework or chart markups anytime that you're watching some training, and then after you've watched some training, that you go and you find a chart and you start marking up or labeling whatever you learned in that training on your chart. So maybe you're brand new and you're simply labeling the EMAs, saying yellow EMA is the average of 5 candles and the red EMA is the average of 13. Maybe you're just doing some really simple labeling. Or maybe you're getting into, more complex stuff where you're learning the different entry patterns. So every time you see a bullish engulfing boss candle, or a bearish engulfing boss candle, or a morning star or an evening star, you're labeling those on your chart, but you're not testing for anything. So to me, the differentiator between homework / chart markups versus back testing is the word test. So back testing to me would be that you're using a spreadsheet to keep track of something. So the example I used earlier is that maybe you're going back in time, you're finding entries, and you're measuring how many points would have been in your stop loss on that entry. And you're doing it over and over and over and over again, because you're trying to get, honestly, not that you actually probably could, but you're trying to get like statistically relevant information to help you know what is a good average stop loss to use to calculate your lot size on Japan 225. This is the kind of stuff that me and my best friend Sylvie, that we did a ton of on US 30 back in 2020, as we were trying to get to know how to scalp US 30 effectively. Okay, so if you're not using a spreadsheet, I would say you're not back testing. You're probably marking up charts and doing homework. If you're newer to trading, you're going to start off with number 1, and eventually you'll start moving on to number 2. Both of these are going to teach you more than attending my live calls will. It's going to teach you more than watching my videos and courses will. You actually doing the work and labeling things and finding things yourself, and then posting the homework into our community chat groups and support groups for review. This is what will teach you how to become an independent, profitable trader, which is my goal. I do not run these sessions because I want you guys to have to listen to me forever and rely on me to make money. It's like literally the opposite of what I want. My goal is to have you learn the strategy, adapt it to your own trading plan, personality, risk tolerance, et cetera, so that you on your own without me can profitably make money in these markets. That's my goal. And the only reason I do what I do is for that. And then the third thing on here is reverse engineering, which I gave you an example of. And honestly, I don't really know if that's exactly the term. This is just what I call it. I say that I'm reverse engineering. You will learn the best by banging your head against the wall and struggling to figure something out for yourself, so that once you do, you truly understand the concept. So like when I was new and we were trading US 30, nobody taught me contract sizes, minimal volume, lot sizes, nothing. We just one day had a situation where me and my friend, we both took the same trades, suddenly he was $800 in drawdown and I was only $80 in drawdown. We had both played the same lot size, and we realized, oh shit, like you're on this broker and I'm on this broker. And even though we played the same lot size, we're in drawdowns, totally different amounts. What's going on here? And then from there, we sat down, we would take fake trades on our demo accounts. We would look at our entry, look at our exit, look at how much we made on that trade, look at what our lot size was, until we figured out, okay, on this broker, this lot size is worth this much per point. And on this broker, it's only worth this much per point. And then it was much later down the road that I ever started to hear the terms contract size or minimal volume. Was like, I had already made like a lot of money before I learned that. And I was actually doing a calculation wrong for an embarrassingly long time before I realized it, and had still made a lot of money. So, but this process of truly trying to figure it out for yourself and doing the calculations over and over and over again, and trying to figure it out, this is what will truly teach you, so that you like internally know that you know how it works, and that you feel very comfortable taking trades and calculating your lot size because you know that you're right. And that's a very good feeling. That's when you become consciously competent, I think is the term. Somebody in the chat, feel free to correct me if I'm wrong, but I think that's kind of the final level of competency, is when you're, oh no, hold on, maybe it's subconscious. I don't know. I'm probably butchering that. But anyways, once you know what you're doing, it's a very good feeling. What does a backtesting spreadsheet look like? That's a good question. I'll pull one up. I'll pull one up at the end for you, Tamika. Okay, so I'll move on from that. So if anyone has any questions, feel free to ask them questions. I'll go grab an example of a backtesting spreadsheet for Tamika, like she asked. But if you guys have any questions, we promise someone else has the same question as you do, so just ask it. And please don't be shy. This is a safe learning environment. And honestly, the amount of participation that we get on these calls truly does affect our willingness to host more. I know there's other people on here that have hosted calls, and not only for me, but for them, the feedback and the interactiveness from the participants really does affect whether we feel like it's worth our time, I guess, to host these calls. If you're just sitting on these calls and you're talking to yourself and nobody responds back to you and stuff, sometimes it can be like really like, okay, like I'm not sure if I should be doing this or if it's valuable or not. So the more questions you guys ask and the more interactiveness we get, the more likely that we are to continue to do more evening sessions like this. Oh, perfect. Hey, Tamika, it sounds like you have something from Leah already that has a good version of a backtesting spreadsheet. Just going to pop back over to that trade and see, oh, look at that. While we were here, that trade got very close to our take profit and then bounced back a little. So what I want you to do is to look at the last candle that's closed, and look at the price of the yellow EMA at that candle. So mine was 27,331. So 11 points above that for me is going to be 42. So I'm going to drag my stop loss down and I'm going to drop it at 42. Okay, which just barely gets me into profit. And then because price is so close to getting down to this previous level of structure, I would recommend locking in some more profit than that, just because price is so close to where we are targeting. You don't want to let all that profit jump away from you if price starts to reject. So I would lock in some more. Plus that way, when it closes, you'll have a profitable trade that you can do your reverse engineering calculations onto. And hopefully this will push down and wick down to our TP here while we're wrapping up the call. Yes, it was recorded, and yes, let me go grab you a spreadsheet example.
If I can, just for a moment, everyone who was part of the sessions that Amy and I did, we shared a template folder with you guys. And in that, there's a number of different types of journals, but yes, Teresa's just going to share something with you here as well. And there are some journals in there that allow you to track back testing for different scenarios.
Okay, so what's on my screen right now? This is an example of backtesting that I had done for April 2020 on US 30 on the 1 minute for January. And so I will share a copy of this, but you'll have to, after you get this link, you're going to have to make a copy. Okay, so to do that, so you're going to open this link and then you're going to come to File and you're going to press Make a Copy so that you have your own version of this chart. And then you're going to want to clear all the data that's in it so that you can start your own chart all over again. Okay, so I'll put a link to this in here. And yes, Michelle, this was recorded. And so I'll get the recorded posted in all the different groups and stuff as well. Okay, so here is this document of this spreadsheet, and then I'll also go find another one. Okay, so that's one way that we did backtesting, and then this is much simpler. That first one that I shared is quite a complex spreadsheet. You'll probably have questions about it, so you'll need to reach out to me. This one here is a little bit more self-explanatory and a little bit easier to use, so I'll also give you this one.
Yeah, this one looks a lot easier.
I would say the other one is probably better, like if you're actually backtesting and you're really trying to get like some statistically relevant information, the other one is probably better. But this can be used. Too. So there's a couple of different examples. I'm just going to scroll through the chat, make sure I didn't miss anything. Doesn't look like it. Go back to our chart and see. Oh, look at that. It's going to hit our TP any second. Come on now. You could drag your stop loss down a little bit more. Probably that last candle closed at 27. You could lock it in. Actually, I'm already locked in lower than that. Yeah. So we need this red line to get down to hit our TP because that's the spread, right? So you need to get the red line all the way down for it to trigger the TP. Sometimes this confuses new people where they think like, oh, it should have already hit it. If your spread was smaller, it may have already hit it, but because of the size of the spread, it hasn't yet. We need another push down here.
Just remember the ask will have to hit your price line, right? Or your TP before it actually.
Yeah, the ask price has to hit your take profit price if you're in a sell. If you are in a buy, your bid price would have to hit your take profit. And that goes the same for your stop loss. So it depends on if you're in a buy or a sell, depends on what line of your ask and bid needs to hit the TP or the stop loss line. And it's much more relevant on Japan 225 than it is on US 30 because US 30, they're only 1.5 points apart, or maybe 2, but they're much closer together. So they normally basically hit at the same time because it's such a small spread. This is a much bigger spread. And so you notice it much more. Even visually, you can just see like literally right now, the bid price is sitting right on the take profit level, and we need the ask price to get down to the take profit level. So hopefully this is a good learning experience for people that have been struggling to understand this concept, because I do know this is one of the harder concepts for newer people to wrap their brains around. When this candle closes, it does look like the yellow EMA will close a little bit lower, and then you could get your stop loss moved down a little bit more possibly. pushing back up a little. So for me, there's not really going to be much. I'm already at 35 and I'm at like 24 basically on the yellow EMA on this candle. So I'm pretty much still already sitting. I mean, obviously, if you wanted to lock in some more profit just because we're at the previous lows, you definitely could, right? You could slide your stop loss down. It's just if you get it too close to this red line, then if price pushes back any at all, that red line will hit your stop loss, right? So you're trying to keep that stop loss a little bit out of reach of this red ask line. All right, everyone. Well, that will be it for tonight. Whenever your trade closes up, or maybe you just choose to close it so you can do the exercise. If you do the reverse engineering exercise from this trade, I would love to see it in the Facebook groups. There's a homework group in the Catch You on the Pip Side group, or there's the Pip Side group for people that are part of our live trading community. Honestly, I don't really care where you post the homework. The part that I care the most about is that we actually see participation from the groups and that people try. And even if it's not right, even if you tried your best and it, maybe you didn't quite get it, you will learn more from trying to do it than you will from this entire session that you watch tonight. You'll get more value out of trying to do that exercise. Okay, but thank you a lot for coming out tonight. I hope that you got some value out of it. And I look forward to seeing your homework. That's the way that you can show me your appreciation for the session. And we'll see you tomorrow morning on our regular morning call at 9:15 Eastern. If you, hold on, let me switch to my slideshow because I think I have another slide on here that has a couple things. Okay, so if you're new to our community and maybe you just seen like me post on Facebook tonight, and you're not part of our community, or maybe you were before, but you're not right now, there is a couple of resources here for you. So the first link that I'm putting in the chat right now is a boot camp that teaches the strategy that we use. It's a three session boss candle boot camp that we shot in November that will get you a little bit up to speed on the strategy. And then the second thing is a risk management template. Now, this is more designed for US 30 than it is for Japan 225 because it doesn't have the extra step of factoring in the exchange rate between the US dollar and the Japanese yen built into it. But this is a template that you can use to help you with your calculations on US 30, and you could adapt it for your calculations on Japan 225. It just would need a little bit of adaptations to it. Okay, and then also if you want to join our live sessions in the morning, but you're not already on them, you can go to my website, which I'm putting in the Zoom chat right now, but you go to www.pipside.com and then click on the education tab. And then that's where you'll see the different courses that are available and the live trading sessions. All right, everyone, have a good night, and we will see you tomorrow morning.
Have a good night. Thank you, Teresa.
Good night. Thank you.
Thanks, Teresa.
Night.
Good night, everyone.
Have a wonderful evening. Oh, have a great sleep.
Good night. See you tomorrow.